Hi guys, and welcome to my YouTube channel. My name is Wanda Zandarasiwera, and in today's video I want to break down the difference between investing and saving. So I have two reasons for doing this video. Number one, I know that in our day-to-day conversations we normally use the two terms interchangeably. I do it myself as well. However, it's very important to know how they're different so that we can rightfully use them. So we are at a day and age where most of us understand that they're important in allowing us to achieve our goals financially. However, I emphasize that we should know the difference because that is the key in making sure that we apply them rightfully so that we can get to the goals that we want to achieve. Number two, I've also had people asking, why can't I get 15% return on investment on the money that I put away? And I thought breaking down the difference between the two should help us to actually unpack the question and understand it a little bit better, as well as also getting some answers to that question, right? So after this video, you should be able to know how to allocate the right kind of tool, either investment or savings, to the right goals. So you should know which one of your goals will require you to save and which one of your goals will require you to actually invest, right? So like I said, after this video, you should get to know key differentiating factors between investment and savings, as well as some of the examples of savings and investment, right? So let's get started. What is saving? Saving is actually putting money away in a safe place, such as a bank, for future use, right? So in simple terms, this is capital preservation. So it's normally considered a low risk account. This is because the money that you put away, you will definitely get it back. Your capital is guaranteed and you can get interest rate on the money that you put away, obviously according to the terms and conditions of that account. And the accessibility of money is easier, so you can withdraw from savings account, right? So in terms of which goals can you use savings account for, it's normally for low to medium term goals. This could be your emergency fund, deposit for a car or a house. Also, if you want to take advantage of tax-free savings account, and also another one, you can use it if you want to save up for a holiday, right? So in terms of investment is putting money away as well in a safe place as well, however with a hope that it will grow, right? And in terms of where you can normally use investments, you can use them for medium to long-term goals. This could be your retirement fund, it could be a trust fund for your kids, and also building wealth, right? Which is what we're all trying to do. So however, there is some risks involved on investment. So the higher the risk, the higher also is the potential of return on your investment. So if your plan is to get higher return on investment, you should be willing to take on some risks as well. So that is a description of how investment works. So just to take a little bit of a detour here. So I want to tell you guys how I found out about the difference between investment and saving, right? So I was in fourth year, I had 10,000 Rand, and I was like, I don't want to use this money because I'm most likely to want to use it next year. So I went to the bank and I put it away on a fixed deposit fund for 12 months, right? So I knew that, I'm not going to use it, so let it grow so that I can get a little bit more return on investment on my money. So then comes a date where my money actually matured. And to my surprise, I only had 600 Rand extra on that 10,000 Rand, which is 6%. I was very shocked. So I thought I was expecting a lot. I don't know how much, but I was expecting a lot. So after that experience, I started exploring on what other accounts or what other investment options do I have that can give me a higher interest rate. And that's where I learned that, there are other options that you can take, such as unit trusts, such as shares, etc., etc. And when you have those, unfortunately, you also have some risks. So there is a potential loss on that. So a bank can give you up to, I think, 8%, 9% if it's really good of return on investment, and anything above that would be your investment away, and that's where you need to assess your risk appetite to see if you want to invest or you want to save. So just to put everything in perspective, I've identified 5 things that you need to assess before you can choose whether your goal would need a savings account or it will need an investment account, right? So we need to be rightfully using those tools for us to be to not be shocked like I was, right? So if you are using the bank, then you will know that there's no way you're going to get 15% return on investment, because they normally offer a savings account. And then you can, if you're expecting anything above that, 8 to 9%, you can lean more towards investment. And also, even investment, they are a little bit safer investment, so you can look for investment which are a little bit safer on that space, right? So number one, you need to look into time. That's how long do you plan to keep that money away for, right? So if it's for a short to medium term, you can consider using savings account. So like I said, for savings account, your capital is guaranteed. So, and for short and medium term goals, you need to make sure that when you need that money, you have it for whatever purpose that you have planned it for. So for medium to long term goals, you can consider investments. This is because for a longer term, you can allow your money to grow. Even if the market is bad, it can still recover because of the time in which you have invested. Also, your risk appetite. You need to know how willing are you to lose this money if need be, right? So can you comprehend losing this amount of money that you're putting away, right? So if it's money that you know that you're definitely going to need it, if you don't have it, you're going to die, definitely use the savings account. Because on investment, like I said, there is potential for loss, right? In as much as the potential to grow is high, there is also a potential of loss. Also, accessibility of funds, right? So if you're gonna need to withdraw in this money every now and then, it's better to keep it on a savings account, because on an investment, the longer you keep it in there, the better the return on investment. And also, you need to make sure that you capitalize on compound interest. Another one, it's the purpose. What do you want to use this money for? I've already mentioned, if you are keeping it for emergency fund, you're going to need it every now and then. You don't know by when you're gonna need it, so it's better to keep it in a more accessible account, because in some investment, it will require you to keep it for longer, so that it can grow to a rate in which you have expected your return. This is the question of, why can't I get 15% return on investment on the money that I put away? If you're expecting 15% return on investment, definitely lean onto investment. And if you're looking into 8% and less, you can keep it on your savings account. So I will move to the type of accounts that you can find on savings and the type of accounts that you can find on investment. So for savings, there are a lot of them that can be offered by the bank, your 32 days notice, your fixed deposit, which is 12 months and more. And those ones will give you interest rates up to maybe, let's say, 7.5, and also sometimes it depends on how much you're putting away. There is also a money market account. This is similar to savings in a sense that it also gives you interest rates, and also the percentage of interest rate is a little bit higher. It can be 8%. However, sometimes the bank will require you to deposit a minimum deposit, maybe 100,000, maybe 20,000, depending on the type of account and the bank that is offering that money market account. When it comes to investments, you have something like unit trust. Unit trust as well would follow a certain index, meaning that they will follow a behavior of a certain industry, and then they will call that a specific unit trust. Like equity, that's where they invest in shares, right? So you can choose a unit trust on equity. There are different companies that offer that service. Could be Allen Gray, Investec, Coronation, you name them. They are there. Also, you have shares, right? So you have easy equity. And if you are checking my videos, I've done a video where you can create your own account on easy equity and buy shares yourself. So thank you. That's it from my side. I hope you enjoyed this video as much as I did. And if there's something that was of highlight to you, please make sure that you drop the comment below. Thank you. If you have made it towards the end, please don't forget to subscribe.